Right now, the Bitcoin market is at a point where emotions are louder than logic. After a strong run-up, the excitement fades, the price slows down, and uncertainty takes over. This is usually the moment when most people get confused. Some start to panic. Others hesitate. And many start asking the wrong question. Should I sell? But this is exactly where understanding the system truly matters. Bitcoin has never, ever moved in a straight line. Every single cycle has periods of massive expansion, followed by consolidation and correction. This isn't a sign of weakness. This is how markets reset excess, get rid of leverage, and rebuild a stronger foundation. What looks like chaos on the surface is often just the market doing what it has always done. In the short term, price is driven by fear, liquidity, and how traders are positioned. People react. Weak hands get shaken out. Leverage gets completely flushed. Volatility spikes. This creates a lot of discomfort, especially for those who jumped in without a plan or with totally unrealistic expectations. But discomfort doesn't mean the system is broken. It usually means the market is transitioning to its next phase. The biggest mistake most people make is focusing only on the price while completely ignoring the context. Price tells you what is happening right now. Context tells you why it's happening. And understanding that context is what separates emotional, knee-jerk reactions from smart, strategic decisions. From a broader perspective, nothing fundamental about Bitcoin has actually changed. Its scarcity didn't change. The hard supply cap didn't change. The network security didn't change. Global adoption didn't suddenly reverse. The infrastructure built around it didn't disappear. The only thing that changed was sentiment, and sentiment is the most fragile, most fickle component of any market. Historically, the very moments when sentiment turns cautious or even fearful are the moments when long-term risk actually goes down. Not because the price can't go lower, but because expectations have already been brutally reset. Euphoria is expensive. Fear is where real value is quietly built. This is why experienced participants don't panic during corrections. They understand that Bitcoin is not a short-term trade disguised as a long-term idea. It is a long-term asset that punishes short-term thinking. And this is where a simple phrase captures an entire philosophy. Bitcoin só se compra, não se vende. You only buy Bitcoin, you don't sell it. That sentence isn't about blind faith. It's about understanding the incredible asymmetry of this asset. Bitcoin was designed to reward patience and conviction over time, not your ability to emotionally time the market. Selling is easy. Holding through the uncertainty, through the fear. That's hard, but history has been crystal clear about which one of those behaviors gets rewarded. Most people don't lose money because Bitcoin fails. They lose money because they sell during fear and buy during excitement. They react instead of planning. They trade headlines and narratives instead of understanding the market cycles. Short-term volatility does not invalidate the long-term logic. In fact, it reinforces it. If Bitcoin were stable, predictable, and comfortable, it wouldn't offer the asymmetric upside that it does. Volatility isn't a bug, it's the cost of opportunity. Right now, the market is testing your conviction. It's asking a simple question. Are you here because you truly understand what you own? Or were you just here because the price was going up? Corrections expose that difference very, very quickly. Institutional players get this. They don't chase price. They manage risk. They wait for liquidity. And they accumulate when conditions are most uncertain. Silence from the big buyers isn't bearish. It's strategic. Large capital moves slowly and deliberately. For the individual investor, the mistake is trying to outsmart all the short-term noise instead of simply aligning with the long-term structure. Bitcoin isn't about perfect timing. It is about time in the system. The longer your horizon, the less relevant today's volatility becomes. This doesn't mean you ignore risk. It means you understand it correctly. The real risk isn't volatility. The real risk is being out of an asset that was specifically designed to protect against monetary expansion. Currency, debasement, and systemic instability. Markets will continue to fluctuate. Bitcoin will continue to test your patience. Headlines will keep changing their tone. None of that changes the core logic of why Bitcoin exists in the first place. Moments like this aren't about prediction. They are about positioning, about discipline, about understanding that the market's job is to make you doubt your decisions at exactly the wrong time. Bitcoin is not a get-rich-quick trade. It's a long-term response to a broken monetary system, and those who treat it that way are the ones who tend to benefit over time. Price moves. Emotions move, but the fundamentals don't. And that's why, for those who truly understand, the mindset remains simple. Bitcoin si compra. No si vende. Thanks for watching. If you found this helpful, be sure to like and subscribe for more content.